Okay, so we're here with Paul Rawlings from Nimbus Accounting today to talk about how to best choose a accountant when you're a contractor or freelancer, and some of the differences between a limited company and an umbrella company. So Paul, thanks for joining us today.
Thank you, Greg.
No problem. So if we just start off, what are the main benefits and differences when using a limited company compared to, say, the more traditional umbrella company?
I think coming from an accounting point of view, it's all down to tax. In an umbrella company, it's not tax efficient. You're spending a lot more money. Basically, you're just being taxed as an employee. But you also have the additional cost of employers' national insurance, because you're actually suffering that as well. So the biggest thing, if you've got your own limited company, is obviously the tax efficiency. I think umbrella companies came about as helping contractors overcome the substitution clause, in that if an umbrella company has got hundreds of contracts, then potentially they could send a substitute for another contract. Which, if you've got one contract in one limited company, it makes it difficult to say that someone's got equal skills and can perform that role. So that's the only benefit I see that an umbrella company gives you for protection of IR35. It obviously does a bit of paperwork for you, but at the end of the day, that's nothing really.
Yeah. So, like, a limited company isn't affected by IR35?
Oh, no, it still is.
Yeah.
Oh, yeah, so it all still accounts for that. And even an umbrella company is affected by IR35.
Right.
But what the umbrella company is trying to mitigate is the substitution clause.
Right.
And it's just bringing it to reality.
And that means you can't send someone else in your place, is that right?
Yeah, so all contracts now, and it's important that you look at the reality rather than just the wording. So all contracts and all contractors should be able to send a substitute in their place. So someone should be able to turn up on a Monday morning and say, right, I'm here from ABC Limited to do this job. Okay. And the client should be happy. And it's because that client isn't employing an individual, they're employing a company. And that's the same with the umbrella company. What they're actually doing is, the umbrella company is obviously the contracting company, and they're sending someone to that client. But with the umbrella company, because they've got a whole host of, say, IT contractors under their books, then potentially on a Monday morning, XYZ Limited could, the actual client could have anyone turn up. You know, all they're employing is the umbrella company to send someone to work. However, the reality is the umbrella company and the limited company are still sending the same individual to do the same work.
Okay, excellent. So, say, if I was in a situation where I was with an umbrella company, like, what's the general process to change from an umbrella company to a limited company?
Well, it's all to do with the contract. So at the moment, your contract is with the umbrella company hold the contract.
Sure.
So you'd need to see what kind of clauses there are for you to leave. Mm-hmm. And then you need to go to your client, the end person, to say, right, can we reissue this contract to my new limited company because I'm no longer trading through the umbrella company. Okay. It should be as simple as that.
Okay, excellent. Now, so when you're looking to form an umbrella company, what is the process and what sort of expenses does that sort of come up from that?
When you're forming your own limited company, it's very simple. You can go on the internet and form your own company today. I had one client who formed a company. It cost them £5, and then they got £50 back. So, and I think, I know, yeah. I think there's a business model somewhere there.
Possibly flawed.
Yeah, but I think what you get from that is a Barclays bank account. So I think the kickback is from Barclays that you have one of their accounts. So you obviously need to set up a limited company, that fee, and then there's the accountancy fee. I wouldn't recommend someone does it on their own, and a monthly accountancy fee can run from anything from £70 to £150 per month.
Okay. Now, when sort of looking for a new accountant, what questions should you be asking them, to make sure that you've got a good fit?
Well, I think everyone's quite price sensitive, so fees first. How much they're going to charge you, but then fees can reflect lots of different things. You could pay someone, an accountant, say £69 a month, but potentially all you're then getting is a call centre at the end of the day. So you can phone up, speak to a different person each time, and potentially you're not speaking to an accountant. So if you were to pay more, I think the more money you pay, the better quality you're going to get. So if you're going to go for an accountant, then you need to make sure that the person who initially signs you up is the person that's going to sort of act for you throughout. Because what lots of firms will do is the big chief will go along, win the business, but then a couple of levels down from them will actually be the person you interact with day in, day out. So you want to know actually who you're going to speak to every day if you've got a query, and it's that person you actually probably want to spend a bit more time getting to know before you sign up the accountant. And also
any sort of would you be looking for accountants that have got experience in the contractor marketplace? Are there accountants specialise in different areas?
Yeah, I definitely go for one that specialises in contractors, because you want basically a contract review. So you need an accountant to sit there, go through your contract, and actually see whether you fall within or without of IR35. And I think with the contract review, it almost takes it to another level now with the business entity test that the Revenue's introduced. So that's highly important. And again, you need to take that test, and which an accountant should be able to sort of give you the questions, and that should be another review point and a discussion you have with your accountant.
Okay, great. Okay, so when, how do, your direct expenses relate to, with limited companies? If you're looking at the umbrella company model, it's kind of everything's sort of offset by your expenses. Is that sort of similar?
Yeah, I think most umbrella companies will only take into consideration travel, and if you can justify any other, like say, direct expenses. So if you're running your own limited company, potentially you're going to attract a lot more expenses than you would do within your umbrella company. So potentially, there's going to be lots of computer equipment, I imagine, if you're an IT contractor and you've got your own computer equipment which you work on, then that's going to be an expense to the limited company. Same as travel. Obviously the accountancy fee is going to go in there. So there's a lot more expenses that would be claimable as long as they're incurred in the course of business as a limited company, more so than an umbrella company would pay you.
Obviously that would make the year end more efficient, the amount of tax that the taxable income is more efficient from the more you...
And your net profit in the company is going to be lower, so your corporation tax liability will equally be reduced.
Excellent. Now, sort of talking with other contractors, sort of one of the biggest complaints is when using limited company is the sheer amount of paperwork. Do you have any suggestions, that way that people can be more efficient or manage the paperwork?
Well, everyone says there's a lot more paperwork, but there shouldn't be if you've got a good accountant. So at the end of the day, it's the accountant who should be making sure that you're keeping your receipts or recommending systems for you to do that. So on the receipt front, there's Receipt Bank. There's lots of third-party products out there that can help you manage that. And the other paperwork,
what's Receipt Bank?
Receipt Bank is a company where you can sort of scan a receipt, and they will enter that onto another accounting product. You can send them emails again with receipts attached, and they basically do all the analysing of the receipts for you, and they scan all of the invoices and put them on an online database, so you can always access them. So the rule is you have to sort of save all your receipts for 6 years, but being a contractor, travelling around a lot, working hard, you might lose your train ticket, you might lose your petrol receipt. Where if you just sort of snap it with your phone and send it over to Receipt Bank, they've got a scanned copy of it and they process it all for you.
That sounds useful.
Yeah.
Yeah, and then sort of day-to-day managing of the account. Sort of software packages that you suggest to your clients.
Yeah, we always suggest sort of Xero, and there's an integration with Xero and Receipt Bank. So on Xero, there's live bank feeds, so everything can go through there. So if you're quite disciplined with how you run your business and you pay everything on the business cards, then when it comes to doing the bookkeeping element of your accounts, it's, you can do it in minutes. So gone were the days where you need a spreadsheet sitting there tapping away with your expenses and putting everything into columns. That's back in the 80s. But today, it's all about online software. And Xero is by far the sort of leader in that. And especially with the integration with Receipt Bank, makes it a lot easier. There shouldn't be any physical tapping on the keyboard. Everything's done with a click of a mouse.
No, I like the sound of that Receipt Bank. It seems like a good, because you can just do it as you're sitting on the train or whatever, you can just, it's one of those things, and just email it all the way through.
Well, that's it, yeah. And I think their turnaround is like 24 hours. So if you send a receipt in 24 hours time, it will be sat in Xero, ready for you to either reconcile it to a bank transaction, or if you've paid for it personally, just to pay it off to your director's loan account.
Yeah, brilliant. So let's talk about sort of, what figures and what you'd expect. Now, say contractor got a contract for 100,000 a year.
Yeah.
What would they expect for their take home?
Okay.
It's a pretty tough question. But.
Yeah. Well, there's obviously lots of variables. So if you as a contractor, one director and one shareholder, then with £100,000 contract, you should be looking at paying an effective rate of tax of about 29%. So potentially you should be taking home about 71,000. So on a 100 grand contract, you should take home 71,000. Now, the other option, which is what lots of people do, and you need to be careful with this in that you're not income shifting, is obviously husband and wife. If your wife is genuinely involved in the business, you can gift as a husband, or even as a wife, you can gift to your spouse shares. And that's tax exempt from capital gains tax. So as long as you're not shifting the income, and they're working in the business, then potentially on that same £100,000 contract, rather than taking home £71,000, you could take home £82,000. So you're then looking at an effective tax rate of 18%.
You'd essentially be paying your spouse or partner a wage.
A wage, and if they're an equal shareholder.
Yeah.
But what I say there is, if you're going to do that, there needs to be some reality to it. Don't just do it for tax avoidance, because that's not allowed, and you can't be doing it for income shifting.
Right. Income shifting is.
Income shifting is basically the husband saying, right, I want the wife to utilise the wife's allowance, and I'm just going to give her all the money. So give her 50% of my shares. But what I'm going to do is, once I pay her a 20 grand dividend, I'm going to take it back and I'm going to spend that money. So that's income shifting.